Have you ever had that experience where you've applied for a mortgage and they come back to you and say that you don't earn enough income on paper to qualify for a mortgage? And you're like, what do you mean? I make $250,000 a year. How can that be? I know. That is the worst feeling in the world, and it's been the worst feeling in the world for me as a loan officer to have to deliver that information in the past, but not anymore. My name is Amy DeBusk, and I am a certified mortgage planner. And what I'm known best for is making really nichey, complicated loans simple and easy to understand. And I want to talk to you about our self employed bank statement loan. So here's the truth about self employed loans and how it really works. You, by all rights, have been able to write off a lot of your profits with losses legally. And your bank statements are a completely different story and depict the true income that you have coming in versus what your tax returns are saying is just not accurate. So that is the whole pretense of why the bank statement loan was designed and developed. And thankfully, in 2026, the interest rates are coming down, and the interest rates on this type of loan are very competitive. Now, I will tell you a couple of criteria, things that you may not have known about the bank statement loan. Number one is that you do have to have a down payment. Now, the down payment can be a gift from a family member. However, you can't get any like down payment assistance for a bank statement loan. So you do really need to have your own down payment. Typically, I see 20% down works best. We do have a 10% down program for the bank statement loan, except there's a lot of hoops that you have to jump through for that loan. So, most of the time, the 20% down loan is going to pencil out the best. And then you do need a 660 credit score, and you do need to have a minimum of 2 years experience in the same industry and 1 year self-employed. So if you're a brand new business and you've never been in the industry before, you're gonna need 2 years behind you before we can do a loan for you. That's a lot like a regular, full doc self-employed loan. You need 2 years, tax returns, but in this case, you need 2 years history of being self-employed. And how we determine what that history looks like or how we document your history is through a business license or a CPA letter that would be written by your CPA stating that they have filed your self employed taxes for the last 2 years consecutively. Now, let's say you have been in the industry for many years and you just turned it into your own business and you've been in business for 1 year. That works. We can qualify you with only 1 year of, being self-employed. So, I encourage you to think about how that would look for you and your family if you could buy a house in 2026 with a bank statement loan. If you're interested in learning more about how you can qualify and what it would take, please log on to talkingwithamy.com. That's talkingwithamy.com. And hey, if you like my channel and you want to hear more information about bank statement loans, I highly encourage you to subscribe.